Hello everyone and welcome to another analysis video. Today we'll talk about Conagra Brands Inc., ticker symbol CAG. There are 4 reasons why I'm choosing to analyze and invest in this company. First, the financial statements looks decent and we have a look at those statements. Second, it's a dividend company with 4.5% dividend yield. The third reason is that this company in the consumer defensive or non-cyclical sector, and the companies in this sector are the last companies to slow down when the whole economy slowed down, because consumers still have to spend for food and for paying the utility bills. The fourth and the last reason why I like this company and like investing in this company is that they have many known brands that I have seen in many of the big box stores, like for example Walmart. And that tells me they have established themselves very well in the distribution channels. I have seen almost all these brands before in Walmart and other stores. Now let's go over the stock analysis. As usual, to decide if I want to invest in this company, I have to look at the financial statements for the past few years. And I have over here information from all 3 financial statements, the income statement and the balance sheet statement, and information from the cash flow statement. So first, let's go over the things that I like about these financial statements. First, the revenue is increasing for all those years that we are looking at. Second thing I like is that the net income, the operating cash flow, and the free cash flow, they're all positive for all 7 years that we are examining right now. The debt to asset ratio is about 42%. So in 2023, the debt was about 9 billion and the total assets about 22 billion, which make it about 42%, which is in the okay area. So there is a possibility for growth in the future by taking on more debt. Another thing I like about this company is that the outstanding shares have been decreasing every year since 2019. So in 2019 it was about 486 million. In 2023 there is 477 million. And the last thing I like about this company is that it's a dividend company, and the dividend in 2023 was $1.32, which worked out about 4.5% dividend yield. There is, however, one thing that I don't like about the financial statements or about this company, which is their ability to service the debt. And we can measure that by the times interest earned ratio. In 2024, they only made 4 times their interest expense in earnings. Usually, the minimum accepted number is 7. So when it goes below 7, since it has been since 2019, some investors choose not to invest in this company out of the worry that it can go out of business because they can't service the debt. But in my opinion, investing includes risk, and I'm willing to take this risk, given that the other good things in the financial statements. Now let's talk about valuing the stock or forecasting 2024 numbers. To be conservative, I'm assuming that the revenue in 2024 will decline slightly compared to 2023. And the free cash flow will be exactly the same amount as 2023. And for the outstanding shares, I'm assuming that it's going to grow by 0.5% in 2024. Even though that we said earlier, it has been decreasing since 2019, but in one of the quarterly reports, it seems they have issued some shares in 2024. So to be conservative, I'm increasing it by about 2 million to about 0.5%. That will give us $3.02 forecasted free cash flow per share for 2024. Using 5% discount rate and 10.4% return investment ratio, in my opinion, the fair value of the share or the intrinsic value is $27.73. Keep in mind this valuation depends on many factors, and one of them is the return investment ratio. So for example, if you want only 10% return investment ratio, then the fair share value is $28.71. And if you want 11% return investment ratio, then the most you should pay for this share is $26.10. In my opinion, I will take 10.4% return investment ratio if I can take the share for $27.73. Especially when looking at the price graph, it's fluctuating between $34 and $28 in the past year. In my opinion, there is a possibility that the price will go back to the same level of March 4th and 5th, which is $27.70. Of course, no one knows the direction of the price tomorrow. It could go back to 34 or it go down to 27. But in my opinion, I want to wait to see if it's going to go down to $27.70, the same level as March 5th or 4th. So that will be it for this analysis. Thank you for watching this video to the end, and see you in another analysis video.